Hello, everyone. Jim Malone here. It's Dallas Trading Floor, and it is a Monday. It's August 3rd, and here we are once again. And interesting. Hopefully, some of the people got a view of the trading alert that I put out for Apple. I think we still have some opportunity on that. To make the trade on Apple. As you probably, I don't know if you've been watching this, or maybe watching the news, you realize that Apple had a blowout quarter. It announced on Thursday, and part of the announcement was that Apple was going to split 4-for-1, and this is a tremendous opportunity. I've sent out an action trade alert on this, so you can benefit from this. The interesting thing about a split is a very specific chart pattern that can be very, very helpful in making profit, because almost all splits follow a very, very specific chart pattern. And I have this put together in a little presentation. It's available on the Action Trade Alerts. We did go to press on it on Saturday. So if you didn't get that, the way to get a copy of that is just go to dallastradingfloor.com, and then in the comment section, if you could just type in, please send me the action trade alert for Apple, and we'll get it right out to you, because I do think it's potentially a very, very nice profitable deal. So something that you might be wanting to be, we might be interested in seeing that. So basically, yeah, here we go. I mean, basically, here the thing is, the market seems to be coming back again. We're basically in a situation where we're up significantly. You see the market trend is up here, and we're above on the NASDAQ. We're above 10,500, which seems to be a floor. It seems to be kind of support there for the NASDAQ. So we're up quite strongly today, 1.44%. Or significant that this number is going up. We're at 10,900 when this slide was taken. So very, very strong in terms of the upward pressure. It seems we have restarted the movement of a lot of the funds still into the big tech names. Now, I might want to indicate two stocks, of course, and they're pretty obvious stocks, but they're getting a lot of the love today. One is Apple, that's up about 5%, and the other one is Microsoft. And the reason for Microsoft is that Microsoft might be in a situation where it is going to be acquiring TikTok. Who knows? I mean, they broke off negotiations, but they seem to be back on again. So who knows? I mean, for everybody watching me on TikTok, just as a safety matter, I will be on YouTube. I mean, I will be broadcasting on YouTube as well. So if you want to get onto the action trade alerts, of course, and you're looking at me on TikTok, the easiest way to do that is to go to my profile, hit the link, and you'll be taken right to the sign up page. And of course, it's free. It's Action Trade Alerts, and hopefully we can make you some money here with that, and we're going to be starting to have some prizes and that kind of thing. Haven't yet put it all together yet, just kind of going a day at a time. But so the two stocks that really have moved up in the FANG area, or FANG plus Microsoft, or Microsoft and Apple. But unbelievably, Facebook FB is getting some love too. So it's really interesting how we seem to have resumed that trend of going higher on the NASDAQ. Just want to show you the various charts for the spider. And of course, everybody knows what the spider is. The spider is basically the largest ETF in the world, and currently it is worth in excess of $220 billion. Many people have their retirements in the spider. It has moved very nicely today. It's up $2.42, or about 0.7%. Now, it is not as powerful, of course, as the NASDAQ in terms of where people are placing their bets, but it's strong nevertheless. And the key level on the spider, I believe, is about 310, and we're well above that at 328. So We're definitely not in, we haven't retested the lows of March 23rd. That was 218 on the spider. It seems like we're continuing in the upward trend. The trend line for the spider is above both the 50-day and the 200-day moving average, crossing it basically at this juncture here that I'm pointing to. That's a very bullish sign. So at least for now, we're in an uptrend. The market tends to be moving in an uptrend, and so it's not a good time to be short in the market. So please, if you have any securities like the SQQQ, you might want to consider closing them. I don't think they're going to do well in this environment. Of course, the SQQQ is the ETF that basically shorts the market. And there's a companion to it, the TQQQ, which goes the other way. But you don't want to be short anything, so be very, very careful. Right now, we're in a confirmed uptrend. I want to show you also the Qs, and this is the NASDAQ 100. These are the 100 largest stocks by market capitalization on the NASDAQ. And this is an ETF that covers that index. It's up very strongly today, 1.4% or $3.84 at 269. This is tremendous. The key level on this one, I believe, is about 250. And the fact that we've moved beyond that means that we are probably in a confirmed uptrend here as well. And typically, the way this rally has worked is that it has not been very broad-based. Many of the issues that are in the S&P 500 have not seen nearly as much increases as have been seen in the NASDAQ, and especially the NASDAQ 100, the top stocks in the NASDAQ. So just want to be really clear on that. We want to, if we're looking for stocks to buy and hold and possibly do trades on, we want to kind of be a little bit careful, and we want to sort of be in the stocks that are in the technology and the medical space, because this is where the money in the market is moving. And also very nice, as you can see down here, there was a volume above the 50-day moving average. This is a very bullish sign. So we're back into the bull market, at least for right now. So again, it's not a good time to be short, and we want to make sure that we get a little bit of advantage of here. Now, I also want to show you the diamond. This is the ETF that follows the Dow Jones 30, and this is the one that mostly you see that the big newspapers will talk about. The Dow went up, the Dow went down. This is only 30 stocks, but yet it does have some components of the of some of the NASDAQ stocks in it. Microsoft is in this index as well as Apple. So this does have some of the big cap tech components in it. The Dow Jones, it's up $2.13, or basically 0.8%. But this typically is more balanced, more oriented towards some of the larger industrial stocks. The largest component in this, I believe, at this point still is Boeing BA, and it's I don't think, even though people have done well in Boeing, I think you've got to be very, very careful if you're buying a stock like Boeing. I think you're going to see some weakness based on the airlines. Okay, so let's go to the questions. Thank you so very much. Tesla calls. What do you think? Well, here's the thing. I sold a Tesla call this morning. I sold it for Friday. It is it's a 1525 call. Now, I only sold it for 2750. I believe it went higher right after I sold it. So, I may get called out. I do have the underlying shares. I do believe Tesla is going higher, and I think there's going to be some sympathy in the stock based on what we're seeing in, based on what we're seeing in the strength of the return to Earth for SpaceX, a kind of a sympathy trade in Tesla. So I do think Tesla is going higher, but I do think it's in a range right now. I think on the low, the range is about 1350. And on the top, I'm saying it's about 1550. I just don't see. I think the stock has got a bit ahead of itself right now, and I think that you may be paying, if you're going for calls, you may be going. It may be a little bit. a little bit premature. Now, if you want to buy a naked call on this one, I would try to get it out at least 3 or 4 weeks, because it's just too short a period of time. Now, when you're selling them, of course, like I do, you want to sell the ones in close, because there's a lot of what they call theta decay. So that's kind of where I'm out on those calls. I just wanted to go to the next thing, and this is something that I just came up with, and it's a kind of an interesting stock. Again, this is not a recommendation to buy or sell any security, as they always say, but this one it caught my attention. I just put together a MarketSmith chart on it, and this one might be one you want to watch list or possibly look at. This is a company called MobileIron, and it's basically an under $10 stock. I'm trying to feature some of those. The buy range on this one is 537 to 563. Now, it is a bit extended beyond the buy range. It's currently trading at 588. The chart looks quite good, and we are just slightly out of the buy range. That's this little blue area here, and this green area above that is typically where you want to take profits. So if you're able to go in this one, you want to run it up, basically buy it in the range 537 to 563, and then up to possibly right about a little bit about 650 or so to maybe 675. That's going to be a good place to take profits in this. So this might be a very interesting one to put on your watch list. It's symbol MOBL, and it's called MobileIron Incorporated, and they've been in business for quite a while. It has fairly good ratings. It's about 50% owned by funds, so it's it's half and half. Tends to be a little bit light on the funds, but it is under $10. And typically, when stocks are under $10 like this, you will see them being a little bit less. A little bit less in terms of the funds are going to be following something like this. So this is MobileEye, MOBL. So let's see, take a next question here. Thoughts on Emphy? Emphy is an interesting stock. It is a stock that is definitely in the 5G space. So let me pull up a chart on Emphy. NPHI, and let's take a look at this chart just real quick. And I'm going to pull it up here. It takes a second for it to pull. There we go. Okay. Well, there we go. Okay. So hopefully I'll have that in just a second for you. There we go. Yeah, it's up today strongly. So let's take an let's analyze this chart real quick. Basically, here's the thing. We are looking pretty good here. It's definitely bounced off of this 40-day moving average. It's moved up. It's got a 98 composite rating. Wow, I think this one's going higher. I definitely think this one's going higher. It's looks like it is following AMD. It's in second place in terms of the in terms of the there we go. Oops, offer there. It looks like it's moving very nicely. It's number 4 in the semiconductor space, but this one has potentially very good support, because it does figure into the 5G thing that's coming out from Apple. By the way, Apple is going to be announcing the new 5G iPhone probably September 21st or 22nd. That typically is when they announce. And so that's part of the reason that Apple is splitting its stock 4 for 1. And this is definitely one to watch, Emphy. I don't know if I might, this is probably the only thing I don't like about this chart, and I like just about everything on this chart except for one thing, and that is the volume is just slightly below the 40-day moving average, but that really is not really a big thing, because you can see increasing volume in the last few weeks. So it looks very strong. This looks like a good chart. Let's look at the weekly just to make sure that we're looking at it properly. And yeah, it looks like it's coming off a very nice pattern here. This is a cup but no handle, so it looks like a gap up. And it looks like a gap up after a cup with no handle. So that is good. I mean, this is a very strong stock. I would, I don't know if you can wait to let this settle. It looks as if, let's just see. There's a buy point on this. Looks like at about wow, good question. The buy point on this one about 128.22 looks like. So it looks like it's fairly extended. Um, if you're going to buy this one, you better do it because it looks like might move extended. Now, here's the thing: when you're buying stock, you want to buy them as they move above a pattern like a cup or a cup with handle or a 3-week tight type pattern. It looks as if there is a cup pattern that has developed here since about the February, May timeframe, and it looks like it's long enough too. What you want to do to see the cup pattern, you go to the weekly chart. You look to see if there's this kind of cupping pattern, but it has to be 10 weeks wide in order for it to be a legitimate pattern. It definitely looks like that is the case here. So very, very good. Thanks for that. So appreciate it. And do you think that Microsoft will continue to run with talks? Yeah, I do. I think this is really interesting. This is a really interesting thing. And of course, I have a kind of a vested interest in this because a lot of people, fortunately, are following me on TikTok. And by the way, tell your friends, please. I do think that this is a weakness in the Microsoft portfolio. They're just so strong in the enterprise that, they don't have as much in the consumer space, especially in social media. And I think this would be just a perfect acquisition for them. So I think that's why people are responding so enthusiastically. Let's just take a look at the Microsoft chart to see how it's trading today. I am currently not in Microsoft, and I think they had excellent. It's gapped up today. Let's look at the chart to see if we can show that gap up on the Microsoft chart. Here we go. Look at that. Very strong support here at 216. Yeah, this thing may go much higher actually. This is a gap up, and it looks as if, let's just see where the buy point approximately would be. I would be saying that the buy point is approximately 217. So we're right at the buy point. So this thing is probably going to go higher. It looks like if it gets support here, and I think it will. And again, Microsoft is, it's one of the great companies out there. Will it go to 240? I don't know, but at least for right now, it's just looking extremely strong. So, here's the thing. I mean, if the talks break down, I think we're going to see it snap back a bit. But thank you so much, Arnold, for that question. That's a really, really good question, and I do think it may go higher. I mean, we can absolutely see it going higher on that. So. Let's see on TikTok. Want to make sure that I'm getting to everybody here. Thoughts on AT&T? Oh, we can't see. Okay, hopefully you can see me. All right. So yeah, I hit a little bit of issues there. Here, thank you, man. NEO. Okay. Well, let's look at NEO again. It's funny, but NEO, and I do not recommend the stock, by the way. Because I have some issues with the way it's a Chinese stock that I do have some issues with it, and it's come down a little bit. And I want you to be a little bit careful with NEO. NEO, of course, is an electric vehicle manufacturer from China that's quite well funded, and they are producing vehicles. That's one thing that I will say about NEO versus something like Nikola or something like that really aren't producing vehicles. But I want to show you the chart anyways. Here we go with NEO. As you'll notice, there's a downward trend on this, but it still has a very, very high relative strength. At 98, it's up 13% today. This is a really tough one to play because, there's strong, there's a nice volume here on this on this volume bar. So it is moving. The question is, I just don't know if this is, if this is really a Tesla compatible. I mean, that's the tough thing to do in the stock market typically, and I'm not sure that NEO, unless they partner with somebody else, is going to be able to do that. That said, I think it's a very interesting stock to be looking at, a NEO, but I wouldn't buy it right now. I wouldn't buy it. Oh, opinion of Fastly. Interesting. Thank you very much for this. Interestingly enough, for full disclosure, I have a friend actually in California. I'm originally from there, who is works for Fastly and is a but I don't have any. I have no insider information because I. Oh, wait a minute, my connections. There we go. Um, for Fastly, I don't have any information on it, inside information on it. But yeah, this has been very strong. So let's take a quick look at the. Wait a minute, I've got an issue. There we go. Hopefully, we'll get the. There we go. There we go. Get the chart. Let's look at the weekly chart on this. It's currently got a composite rating of 89. This is excellent. And I kind of want to show you this one really quickly. This is just recently went public. So here we go. Typically, when you're buying an IPO, and this is an IPO, you want to be careful. You don't want to buy it within the first 3 months. And the reason is because it has to develop this chart pattern. And it definitely has. I mean, it came out of the gate at about 18. It kind of went along, and then obviously it's been discovered. You can see the very, very strong volume action here. So this one may be going higher. It looks like it's formed a little bit of support at about the 90 level, but I wouldn't buy this one right now. I'd look for some support on this one before you did. But it's got a 99. It's got a 99 relative strength, which is fantastic. By the way, what the relative strength is the blue line, the relative strength line, is how the S&P 500 is trading, and the number, the 99 number, means that it's trading above in the 99th percentile above the S&P 500. So extremely strong. And Coupa Software is number 1 in the category in the enterprise group. But this is just a powerful stock, and it's probably going to continue on. And again, I have to call some of my contacts in Silicon Valley on this one. But it looks very, very strong. I would watch this. I wouldn't go in with a full position on this one just because it's so new. But it looks like it may have legs. And I'm going to do a little bit of more research on Fastly as well for you. I really appreciate this question. It's a really good question on a stock that I think may have some serious legs. Okay, so how can we get the action trade alert for Apple? Thank you so much. I sent the Apple trade alert out on Saturday, and so unfortunately anybody that was not on the list didn't get it. But here's the thing. I'm going to try to send it out again because I do think it's important. And I'm in the trade too, by the way. So I'm absolutely in this trade. The most important thing to do is to just go to DallasTradingFloor.com. I have that up on the screen. And then in the comment section, ask a question. Just put in the information there, and I will get you out a copy of this. I may do a complete remailing of this one. It's the reason this is important is because whenever a stock announces a split, the stock patterns go through a very specific form, and it's basically a 5-phase format. And basically, the first 2 phases, the pre-announcement and the announcement phase, have gone forward. We're now in phase 3, and this is basically we're going to see the stock come up, move up a lot in price, and then it'll come back down a little bit, probably till about Wednesday or Thursday, and then it will start its main ascent to where it's going to be right before it splits. I suspect the apogee, the top of the stock, will be at approximately August 27th, because August 28th is the day of the split. So typically the way these work is the stock will sell for the most per share on the day right before the split or of the day of the split. That's typically what happens. And then when the split happens, there's typically a little dip in the stock price because people sell off certain positions. So this is a very predictable move. And if you want to get in on it, go to our alerts list at DallasTradingFloor.com. So that's a good way to see it. Let's see. Okay, so next question. Oh, $7 billion added to Microsoft capacity over TikTok. Yeah, I believe that. I really do. I think TikTok is going to be absolutely a huge, if they do it, and again, now here's the thing why I think there's a very, very good chance that this is going to happen. It's very unusual for a president of the United States to get on the phone with a president of a major company like Microsoft, but apparently, and this is what I've heard through the grapevine. You have to check it out because some of this stuff may or may not be confirmed. But apparently, on Sunday, Satya Nadella, who's the CEO of Microsoft, was on the phone with Donald Trump directly. So this may actually really happen, and if it does, I think it'll be huge. I think it will make, it will just add huge valuation to Microsoft because, Microsoft has the ability to really, really capitalize on this kind of thing. This is the one area that they're not as strong in. I mean, they're relatively strong with Xbox and all that, but this is something that would just put them over the top. So I think it's awesome. Awesome on that. Okay, we have a question for a home builder, LGIH. Let me get a chart. Let me just take a quick look at the chart on this one, LGIH. And I believe this is, LGI Homes, right. This is based in the Woodlands, Texas. Very, very big in the Texas market. And of course, that's where I am now. I'm in Dallas area, in North Dallas. But they build all over the state, and they're very strong. It's, the only thing I don't, and let's take a quick look at it. Very strong. Look at that composite of 99. It's up $4.69 today. That is just, wow, that's off the chain. It looks like, I want to look at the pattern a little bit more carefully. It looks like we have sort of a 3-week tight. Yeah, this is probably going to go higher. This is definitely a watch list stock. I don't have a buy point on this right at this moment, but I definitely think it's in the right area. Let's kind of check some of the fundamentals on this. See if we can check some of the company fundamentals. Okay, it announces basically on the 4th. Okay, this is a little bit dangerous. You don't probably want to go into this stock, and here's why, because typically it's going to run up the most, typically right before earnings. So you don't, unless you're willing to sell it tomorrow before the bell or whenever they announce. I don't know if they're announcing in the morning or not. I wouldn't be in this one just because it will fall off after earnings, guaranteed, even if the earnings are very, very good. So that's the thing. Usually it's, unless there's a very unusual circumstance like happened with Apple on their earnings call where they announced the split, typically stocks, and this is just typical, will typically drop after the earnings call. So just to be a little bit careful on this one. Now, if you are interested in buying it, it's got an excellent chart. Wait until after earnings to buy it, and then I think you might be onto a very big winner here. But I wouldn't buy it today or tomorrow. It's a little bit too risky. I think you will probably want to go and if it shows really good promise off of tomorrow's earnings, that's when you want to buy after earnings. Intel, the recent news was bad, but hoping for a bounce in 50s. Okay, here's the problem with Intel. I love Intel. It's a great company. It is, one of those companies that just, really is, is a total, is a total institution. But the problem is, it has, as of late, been kind of kept out of many of the high growth areas, such as the graphics processing that NVIDIA is dominating. So they don't have nearly as high of a relative strength or composite rating as I'd like to see. And this chart, it just is not the kind of chart you want to look at. Let me show you this chart, and this is why I just think that, and this is, by the way, everybody out there, I want to be very clear about this. This is why you set a stop loss at 8%. As you can see, when they had earnings, it just fell off the face of the earth. Let's go to the weekly chart here. As you can see, this red arrow down here, it just dropped like a stone from up at about 62 all the way down to 50. I think if you're in this stock, I think that, just for safety's sake, you might want to sell it and wait to see what happens. It's dropped more than 8%. It's not that it's not going to come back. I think it will. And if you have time to wait, maybe that would be a good thing. But always when you buy a stock, this is so important. Put that stop loss in at 8% so that if you do get a drop like this, you won't get rid of your capital. I mean, This looks like it's almost a 20% drop in price. I mean, this is the key to preserving capital. You always, if you have a stock, you always want to make sure that you have a stop loss on it, good till cancel, at basically 92% of what you paid for it. And the reason that for this, of course, is to avoid such things as happening now. So I apologize. I feel for you, but you got to learn how to set the stop losses, because that is going to be the secret to making money over long term, is preserving your capital. Do you suggest a way to buy Apple? Well, in my trade alerts, here's the thing. I mean, we're going to see a little bit of a back off on the price, probably up until about Wednesday. And how do I know that? Well, the reason I know that is because that is the typical pattern that you see in a stock. Now, I cover this in my action trade alerts. Unfortunately, I went to print on that on Saturday, so but you can still get it. I will send out another. I will send out another tranche of these, but you have to send me a comment to Dallas Trading Floor. So if you want to get the action trade alert, that basically is my idea on how to trade Apple in this stock split, you want to send it to dallastradingfloor.com. Just go on there, and then also, you can one in the section right on the first page, you can just get on this action trade alerts. That won't give you that won't do it, unfortunately, for that. But if you go to the comment page, it says ask us a question. Put in the subject line, please send Apple stock split play, and then I will do that for you. So sorry about that. We were going to get on that, but I do have those coming available as well, so that you can see how I am personally going to be playing the stock split when for Apple. So let's see. Next question. Let's see, thoughts on CRL. Let's get CRL real quick. CRL. Let's see if I have anything good for the Charles Rivers. Wow, look at that. Wow, weak as out. Is this the one that? Okay. This is interesting. So this is okay. Well, they're doing extremely well. Wow. Very, very nice. Very, very nice. Let's take a look at this chart. That's one I hadn't been that aware of in this space. It's definitely a leader, CRL. Wow, it's up $8.72 a share, or 4.38%. That's excellent. It's just a nice composite rating. Now, before we do our checklist on whether to buy this or not, I want to look at the financials just really quickly, the fundamentals on this one, just to make sure that we're not buying it yet. You don't want to buy this one right at this moment. You want to watch this one. I can show you why. Okay, here's the thing with Charles River. Great company, great numbers, looks tremendous, but it's going to be announcing on the 5th. Well, the 5th is basically 2 days from now. You don't want to buy this going into earnings. You want to wait until it comes through earnings, because more than likely it's going to drop after earnings, even if they show extremely good numbers. This is typically the pattern. It's sort of it's a buy on rumor, sell on news kind of thing. Even with tremendous numbers, you're probably going to see this one drop a little bit. So you might be able to pick it up a little bit at a little bit better price. The danger of going to this thing prior to the earnings is that you will buy it and then it will drop after earnings, and you will lose a little bit of your capital. Now, it's very important, if you do go into this stock, make sure that after the earnings, when you buy it, you set your stop loss at 8% below what you paid for it, or just take the amount that you paid for it, multiply that times 0.92, and that will give you the number that you need to put in good till cancel. So very, very important on that. Which stocks are you recommending this week? Well, I basically have 2 recommendations, and again, one is a very strong recommendation, the other not so much. The most strong recommendation I have this week is Apple. I have to say, because it's splitting 4-for-1, you're going to see that stock move up a little bit in terms of its price prior to the split. I want to show you the chart on that, and also I have this on a special trade alert, because this is such a rare event that a company of this quality typically splits 4-for-1. Now as you can see, it's up tremendously. I still think this is going to continue to move higher. I basically bought 2 full positions this morning and a full position on Friday, so I'm very I think this one is going to do quite well. This is Apple. It's number 2 in the space, in the telecom space, which I think is an odd sector that this is in. I think it's just been moved over to this telecom consumer products area, which is kind of odd. But look at this. I mean, tremendous amount of pressure. It's up $12.86 today, when right at current. And after hours, it's down a little bit. It's gonna be trading a little bit down. I think you're going to see it move off of this number, but I think it's very, very viable at about $432 or so, in that range. You're going to see this thing appreciate probably until August 27th. That will be the day before it splits. That's typically, in a stock split scenario, the day that it goes to the highest level, and it will reach its peak a day before it splits, and then after it splits, it will come back down with the split shares reflecting that. So that's my main recommendation. Now, I do have another one here. This is a company called Mobileye. This is just a kind of a fun one. This is more of a stock that is under $10. It's a lot less expensive. It is currently a little bit extended from the buy zone. The buy zone on this one is 537 to 563, which is a lot tighter than you normally have it on most stocks because of its low price. But this is a company that does security for mobile devices for enterprise, which I think is a very good area right now. So that's my other real kind of pick in that particular area. So let's see. What do you think about NIO? Okay, I think I already covered NIO. Oh, Microsoft. Okay. Hey, thanks for sending good vibes. I always appreciate that. Thoughts on audio codes? You know what? I'm in audio codes. By the way, I want to show everybody currently what my positions are currently. This is my positions, and again, I don't hold all that many positions really. People are very surprised to learn that. I typically only hold about 8 full positions. I'm not currently fully invested. I will be probably coming into the market a little bit more, but I own Apple, of course. I own a company called Blink Charging, which is down a little bit today. This is a under $10 special stock that I bought, and it's done fairly well. I'm also in Tesla, as you all know. Now, Audio Codes is up today, at least when this slide was taken. I do think that I probably should have sold this right before earnings. If I'd been smart, I would have. I don't have the underlying stock in here. I have a bull call spread on this one. I don't own the underlying stocks. And all the other ones, I actually own the underlying stock. Also, a company called Qorvo, which is a 5G play coming in. And there's 2 other ones, Skyworks and Imphy, which are also in this space. I haven't yet entered Skyworks. I do think that that's definitely on deck as a potential company coming into the September 21st timeframe, when Apple will announce its brand new 5G iPhone, which will be a big deal, I think. So this is what I am currently in right now. Okay, I have a question on Micron. Let me pull that up here as well. Now, by the way, for everyone that doesn't know this, Micron Technology is one of the 3 manufacturers of the 3 free pure play manufacturers of computer memory. The others 2 being Hynix, it's a South Korean company, and also Samsung. There's a Samsung semiconductor division that's also very, very big in that space. But MU is the symbol for Micron, and I believe it's sort of misclassified because it's classified in the computer storage space, but yet they don't make any drives like Seagate and like Seagate or Western Digital. So I do believe it's somewhat misclassified in the area. It's up pretty strongly. There is a semiconductor cycle that we're in right now. because they have gone to the new they have gone to the new technology. So we're going to see an upgrade cycle. But here's the problem with Micron. I would love to recommend this stock, but I just can't because it's only got a composite rating of 66. I just think that there's better places to make money in this market. And I love Micron as a company. I love their products, but I just can't recommend them as a stock just because their volume isn't there. They're moving back towards the 50-day moving average. And I just don't think that if you're not in it, I don't think you want to be in Micron. Not because I don't like the stock. It's just that I just think that there's many better areas to place your money rather than Micron. Okay, let's see. Thoughts on MVIS. That's an interesting one. I don't know MVIS as a symbol right off the top of my head. So let me take a look at that real quick. MVIS. And let's see. This is Microvision. Oh, yeah, not a bad company. Boy. Very cheap, though. Interesting. Wow. This is okay. This is high resolution. Okay, this is really interesting. Boy, this is a very cheap stock. I don't think I would buy this one just because of the chart pattern, but it is an upward moving chart, so that is good. It's up after hours, basically 1 cent. This is a penny stock, a very high risk area. You're better off with OLED, which is of course, Universal Display. I don't know if you're familiar with that one, but it basically all of the technology for all of the HDMI organic LCD screens that are made basically in China and Mexico and everywhere else in the world use OLEDs technology. This is a company called Universal Display, and I think you're better off with Universal Display than with Microvision just because it is a stronger stock. And let me pull up OLED to give you kind of a look-see on that as well. Yeah, but of course it's a lot more expensive, but it's got a much higher rating. I think you're at a better rate, and also got a much better chart. Instead of Microvision, this is the one I would buy. Now, here's the thing. You say, well, Jim, one's $2 stock and the other one's $177 stock. I can buy, a ton of the $2 stock. You're right, but here's the problem. It's more risk. If you want to be in the space, buy 2 or 3 shares of Universal Display rather than Microvision. It's just going to be better. It's going to be better bet. I know it sounds kind of strange, but that's the way you want to play it, I think. This is the one you want if you want to be in the display space. I'm not particularly excited about this space, but it does have an excellent composite rating of 92, and I think it's on the IBD 50. So I think it is a pretty good area. Thanks for my cue is is thought beyond my Q is on CNDT. Thought it would be a $10 stock. Let me look at this Q and let me look at CNDT real quick. Let me see if I can give you an answer on that one. Oh, there we go. Go over here. CNDT. CNDT. Wow, this is a cheap one. No, this is a bad stock. You don't want this one. Okay, let me show you why you don't want to buy this one, even though it's up today. And it does have, it is up today. So here's why you don't want to buy the stock. It has a downward trending chart, and it's below the 50-day moving average. You never want to buy a stock on this side of the 50-day moving average. It just is trending the wrong way. It's $2.13, and it's up today, but it has a composite rating of 1. This is the worst that you can get, and you just don't want to be in this one. This is a terrible business. Commercial services outsourcing. Ouch. No, this one, you don't want this stock. Believe me, if you're interested in under $10 stocks, consider MOBL, the one I put up today. This one is terrible. Just for your opinion. Sorry about that, but I hope I didn't offend you, but that one is really bad. You don't want to buy it. Okay, let's see. Roku. One of my favorite stocks, but I don't know if it's buyable at this point. Let's look at the chart of Roku. I've been having this one on the watch list on and off. I've never bought it, but it is. I do use it all the time. As a matter of fact, I want to be able to put Dallas Trading Floor on Roku. That's one of my my ambitions here. So hopefully, and I do like the idea. They're building it. All the Chinese television sets that are being built are all building in Roku as a standard thing. It's going to be like Dolby. There's no question about it. So let's look at the weekly chart for Roku. It's up strongly today. And let's take a look. Here's the problem with it. It's in a great category, Netflix. By the way, for everyone, on Friday I sold my Netflix. I got my increase. I basically bought it off the base, which was $4.59. I then sold some options on it. I held it for about 3 weeks, and I'm out of Netflix. Still great. I love it, but there's some other places I can allocate my money. Roku's number 2 in the group, and of course, as you well know, Roku was once part of Netflix and it was spun off. Looking real strong with $7.45. It does have an excellent chart pattern. This might be, there's only one concern I have. It's got a low composite rating of 69, but this looks like a very good chart pattern. Let me put this on my research list, RUKU, and get back to you. This is definitely buyable in this chart pattern. There's no question about it. Let me see if we're coming up on earnings. You don't want to buy this thing prior to earnings. It's just too dangerous. Oh, yes, it is. It's prior to earnings, and the earnings per share is down. Okay, you don't want to probably buy this one until they have gone through earnings. I do believe we're going to see it drop a little bit after earnings. The earnings per share last quarter, of course, down 400%. So that's not the goodest thing. They can definitely come up. It's in a very, very good group. As you know, because of the problems with COVID, people just aren't going to movie theaters except for drive-ins, which there aren't very many of them. And so people are streaming on Roku for a lot of things. So it's a good technology. It's really going to have legs, but wait for after earnings. You don't want to buy this thing until August 6th. So don't buy this thing until August 6th, but watch list it. It's pretty excellent, and that's my opinion on it. Please don't buy it before earnings. You probably will snap back in earnings. Okay, Candy I read an article about the competition for Tesla. Okay, used to be a pump and dumper, if I recall. Yeah, here's the problem. This is always the problem when you have such an outside success like Tesla. Everybody wants to jump on board. Everybody wants to get on the bandwagon, and it's just, I don't think it. It's a lot of pumping and dumping. There's a company out there called Workhorse, which. I don't know. I can't get excited about it because I just don't think they have the oomph. I think that where the competition for Tesla is going to come, it's going to come from more of the incumbent automobile makers such as Ford. Now, I don't even think Ford is viable right now. I looked at the chart pattern over the weekend. I would so like to buy Ford, but I don't think I can based on its chart pattern. Right now you just have to be really careful with the Me Too's. With Tesla, they're pretty much out in front, and you possibly on day trading, you might be able to make some money on some of these stocks, but I just think it's too risky to swing trade them. So I just can't be I just can't be a fan of some of these non Tesla electric car companies. I think they're difficult to be they're difficult to be in. That's all. Oh, hey, answered the question on Intel earlier. You made a follow-up question to your website. Oh, thank you. Thanks, man. I will try to get to that as quick as I can. It probably won't be until late tonight because typically I do the questions after close of business hours after I balance my portfolio. So, all right. So definitely want to take a look at KL. By the way, this is a top-rated stock. This is Kirkland Lake Gold. It's a Canadian gold firm that has quite a good portfolio of mining interests in both Canada and Australia, and I particularly like it because Australia is turning out to be probably one of the best places to mine gold these days, better than South Africa. And this KL is very, very well positioned. It's down a little bit today, but it's still absolutely top rated. Let's take a look at it. Here we go. And yeah, okay. It's seeing a little bit of resistance here. You can see these train tracks here where it goes up and then it goes down. But I think that it's coming off an extremely good cup and handle base, so it's gapped up. Let's just see if I can get a little bit better read on that here. If I can get a little bit better, I'm going to look at the weekly chart on this just to make sure. Oh yeah, this is definitely good. Now it is a little bit off after hours, so this is settling. It is pulling back to it's pulling back to about the 51 level. It looks as if it is, but let's look at that one again. Oh, also I want to make sure that we're looking at the fundamentals. Okay, we're definitely out of earnings. That's good. It's got a green light to buy this because we're not in earnings season on this one. They won't have earnings until November, so very, very good. Yeah, this is a tremendous stock, and I think that let it settle a little bit. Let it settle to about the 50, 51 level, and then as it moves up, you don't want to buy a stock ever on a downtick. This is on a downtick right now. Wait for this stock to move up on an uptick. That's when you want to buy it. I think this is very, very viable. This is on the watch list. Don't buy it now because it's on a downtick, but it's out of earnings season, so this one is very strong. And I think that I think it's probably going to go higher. Now, how high? Who knows? It just depends on the price of gold. But gold has broken through the 1880 level, which is very exciting because that means. By the way, I am not one that likes physical gold. Everybody on the radio will say, "Oh, the world is coming to an end. You should buy physical gold." Well, that's great as long as you can trade it for food with somebody, which you probably can. But it's better to own the gold mining companies because everybody wants to have that gold. But the gold mining companies are going to make the most of the profit on that. So that's where I think you want to be, not in the gold itself, not in the physical gold, but in the gold mining companies. And there's two really good names in that. One, of course, is KL, and the other one is FNV, Franklin, Nevada. Also very, very strong. And I've had, for a cheapie stock under $10, I did have a top-rated gold mining company. It's also Canadian, called B2 Gold, and the symbol on that was BTG. That's a little bit more speculative, so I don't want to necessarily put as out there as much. But that was a little bit more speculative. But if you're looking to invest in the gold sector, I don't think you could go wrong with KL at this point. So, my humble opinion. That's a look at KL. Thank you. Thank you very, very much. Oh, feeling about space. You know what? It's interesting. I have not been in Virgin Galactic since the first quarter earnings, and this is what I typically do on a stock such as this. It's highly speculative. This is about the only pure play on space tourism right now is Virgin Galactic, SPCE. I'm going to take a look at the chart. Typically, the way to play this is to buy it and then into earnings and then sell it right before earnings. That typically will give you the best return on your money because typically these things get bid up and then not so much. So let me kind of show you. Yeah, we're at 24, so that's pretty good. I'm just going to take one quick look on the. Yeah, it's going to be. Yeah, today you don't want to. This is not buyable currently. Obviously, it's the 3rd of August, so it just reported. So see how this thing reports after hours. It's down. Yeah. Okay. This is an object lesson. I want to show you this. Okay. It just reported, and look, it's down. And so even if it reported well, which I believe it did, it's down. See, it's down $2.15 after hours. This is true of about 90%, 80 to 90% of all stocks. They run up prior to their earnings, and then on the news of the earnings, they will typically drop, even if they've had a good quarter. So this is something that you always want to be careful of when you're buying a stock. Try not to buy it into earnings. Try to buy it after earnings, and that can be helpful. This does not have a chart that's viable currently. Now, here's why I say that. If you're looking at this, I'm going to switch to the weekly chart here very quickly. You always want to look for this for the weekly chart. You see how this had a blow off top? When I owned space, what I did is I bought basically at the 18 level. I let it come up, and then right before earnings, this was earnings last time, this blue bar, I sold. Why? Because I know, based on my experience, that typically stocks will run up to earnings, and then on earnings they will drop, and that's definitely the case here. I do believe that we're going to have a similar kind of pattern as well. We're going to see a little bit of a drop off, not quite what we did on the first quarter, because the problem with this company is it is pre-revenue. It doesn't really have revenue, and it isn't really in a position to have revenue yet until they can get their space plane running, which I think will be a tremendous success. But the question is, can they get it off the ground? And that's a big deal. So on space, I don't buy this one basically until it comes after earnings. I do believe it's going to fall, maybe back down to the $21 level. I'm looking at about, let's see if I can put and give you an off the cuff answer, which usually are not that good. I think that it is basically, it's probably going to settle around 22 or 21. And then I think we may see it move up again. But for right now, I don't think you want to be in the stock. You don't want to be in the stock into earnings. You want to wait until after it's settled, and to in order to go into the stock. So my take on that. All right. So let's see. Do you recommend buying Microsoft now? Well, interestingly enough, I think Microsoft actually might be a buy. Let's look at the chart on Microsoft. It did get damaged a little bit in earnings, even though their earnings were of course great. Microsoft is kind of a machine. It's a very unusual stock, because typically stocks that have that kind of dividend that you have on Microsoft, they're not growth stocks, but Microsoft is. My goodness, look at that. Wow, it's up after hours too. This is definitely going higher. Microsoft's going higher. Let's look at the chart on it. Yeah, Microsoft is definitely going higher. Look, that's a gap up. You have very nice strength there. Yeah, this is a good chart. This is a good chart. Let me just check one little thing on the fundamentals here that I always do. I always check to see when they're going to announce. That's so important on how to enter a stock. Yeah, it's not until October. Boy, I think this one definitely has this one's probably going higher. This is probably going higher. I would see if I could pick it up for about 215. I don't know if you can though. Microsoft's definitely going higher. Well, it's almost the end of the hour, and I so appreciate everyone coming on and looking. Tell your friends about us. If they're on TikTok, I have I'm over on YouTube. I'll just show you, and you can get on our Action Trade Alerts really easily. If you're watching on TikTok right now, just go to my bio, click the link. It'll take you right to the sign up page, and you can sign up there at Action Trade Alerts. If you didn't get the Action Trade Alerts on Apple, I'm going to try to put together a list to send more of those out to people. What you can do on that is just go to the website, www.DallasTradingFloor, and then in the comment section where it says ask a question, that stock question, just put in a little blurb in there about how you want to see the trade, the trade summary for Apple, the 4-for-1 split, and basically I was showing the phases that more than likely the stock will go through, because 90% of all stocks that announce a split typically go through the similar pattern, and it's a way that you could possibly buy the stock and see a nice increase in it, because the stock split, when a stock split is announced, it is a very, very tradable pattern, and that's the thing I have broken down in the trade alert on this. I'm also going to show you really quickly again the address. And for everybody out there that's watching on Facebook, YouTube, Periscope, and Twitter and Twitch, it's DallasTradingFloor.com. And I'll pitch it. Now, I have one last item that I want to put up here for everybody that's looking on the show, and that is I have a link to today's slide deck. And this has all the information of the slides that I have, plus the under $10 trade of stock that I think is very, very good. Possibly you want to put it on your watch list called Mobile Iron, and that's available by going to http and then bit.ly, bit.ly/32 lowercase r b r j and 6, and that will give you a direct link to the deck for today. And I appreciate everybody tuning in, and I will see you tomorrow on Dallas Trading Floor. Thanks, and tell your friends about us.